Hi, I'm Debbie Ingram, and this is another in our series of Under the Dome interviews focusing on affordability in Vermont. Today we're talking about taxes with a recently retired certified public accountant for a large firm in Vermont, Rick Wolfish. Rick, thanks for being with us today.
Thanks for having me.
Great. And Rick has done a lot of given advice and testified before the Vermont State Legislature and the Vermont Tax Department, and prepared taxes for many years. So why don't we just dive right in then? And I will ask you, first off, what were some of the taxes that you thought were most effective in Vermont, and which ones do you think are not as effective?
I think the sales and use tax is very effective. Of course, the sales tax is a regressive tax, which means whether you're poor, middle class, or rich, you pay the same rate. But the reason I think the sales tax is fair is you have to look at what the other states are charging, and Vermont tax rates are competitive with other states. And of course, one of our competitors is New Hampshire, where there is no sales and use tax. So we made clothing and shoes exempt from sales tax. So I think that was a good thing. And the other challenge was everybody would buy things from Amazon and online services and not pay sales tax that way. But now Amazon and all those online services charge sales and use tax. So I think it's an effective tax, the rate is reasonable, and people pay it. What troubles me is the state estate tax. And the estate tax is a tax on the value of all a deceased person's assets. And the reason it troubles me is only 12 states out of 50 have an estate tax. That's less than 25% of the states. And Vermont, of course, is one of those 12 states that has the estate tax. And I don't think it raises a lot of revenue. I'd be surprised if there's 12 or 20 taxable estates in Vermont in a year. And I have had clients leave the state more for the estate tax than the income tax. So I don't think anybody's talking about it anymore, so it's not on the agenda. We did get the exemption raised. My firm and I were part of that, but I still would love to see the estate tax go to make Vermont more competitive. Another item on my wish list is on the individual income tax, the taxation of Social Security and military pensions. So for Social Security, only 9 states out of the 50 tax Social Security income. And I think this is an area where Republicans, Democrats, Independents all agree that we shouldn't be one of only 9 states out of 50 that tax Social Security income. I think the challenge is there is a fair amount of revenue on the taxation of Social Security income, even though lower income people don't pay tax on 100% of the Social Security, but it does generate revenue. So the challenge is, I guess, finding a revenue substitute. But that's my wish list, is to see the estate tax go completely and to see no tax on Social Security income, pensions.
It's very interesting that you bring up the estate tax, because actually you're my only guest so far that has talked about that, and it makes sense. So there's a federal estate tax, right? But there is an exemption for it's pretty high, isn't it?
Yeah. So let me give you the comparisons. The federal estate exemption, using round numbers, is about $14 million per person.
Okay.
But if you're married, you get to double that. So $28 million. It probably affects less than 1% or one. It affects almost nobody, okay, the federal estate tax. The Vermont estate tax exemption is $5 million, but it's not $5 million per person. So if you're married, instead of getting a $10 million exemption, it's still $5 million for 2 people. So like I said, it's still a big number, 5 million. So if you're less than 5 million of fair market value, you're not subject to it. but it's just another tax that makes us non-competitive. And as I said, I have had clients leave the state, valuable clients that contribute to the economy, philanthropic people, and they leave because of the estate tax, not because of the income tax. And so only 12 states have the state estate tax.
Yeah, that's really interesting that you bring that up. And so these are families that want to leave the wealth that they've managed to earn and accumulate over their lifetime to their children, right? So that's, yeah. So I particularly wanted to highlight that because, as I say, you're a unique voice in that, but I really appreciate your perspective on that. So, so you mentioned already a little bit comparing Vermont taxes to other state taxes. How about, could you do that a little bit more? How about our income tax, for instance?
Sure. So I think we all know we live in a very high tax state. We all love Vermont, but in just about every place you'll look, we're in the top 10 of highest tax. And that includes sales, income tax, and property taxes. You know, we're in the top 10. But if you look at individual income tax, the top rate is 8.75%. Again, that puts us in the top 10. And our corporate tax at 8.5 also puts us in probably the top 10 of the 50. So it's a competition. We're not in competition with Canada or other countries. We're in competition with the other 49 states and Washington, D.C. And as much as we all love Vermont, it's hard to attract businesses because our individual tax and our corporate tax rates are so high.
I see. And are there certain things that you would do, for instance, with the corporate tax rate? How would you change it? Would you just lower it straight out, or are there other ideas?
I'll tell you what I would not do is increase the individual or the corporate tax rates. You know, a lot of our legislatures, when they try to balance the budget, they say, oh, easy solution, let's raise the tax rates on the rich. Well, we're already one of the highest tax rates in the country. So what's that say? Well, the last person that leaves, please turn off the light. So what I would not do is raise the individual tax rates or the corporate tax rates. Now, for our corporations, there is an economic incentive, and I would love for your listeners, if they're not aware of this, to be aware of this. There's a payroll tax credit for creating new jobs, and I actually co-wrote that program. And the way the credit works is if you create a new business, Canadians, are you listening? So the Canadians that want to come to the States and want to create a U.S. company, if you come to Vermont and you create jobs, there's a very generous payroll tax credit. Or if you're already here and you're expanding, and your expansion is going to create new jobs, like I said, you could say, well, I could create the jobs in Texas and form a new subsidiary there, or I could create the jobs in Vermont. And please be aware of, it's called the Veggie credit, V-I-G-I, I think. And it's a good credit. Now, it's not as good a credit as our neighbors, like New York has these economic incentive credits where they would take money off your utilities, they would take money off your property taxes. But of course, they're a much larger state than Vermont, and we can't really afford all those economic incentives. But the Veggie credit is a wonderful credit. So if you're thinking of coming to Vermont from outside of Vermont, either internationally or from another state, or if you're a Vermont business owner and you're thinking of expanding, please immediately contact your CPA and say, tell me about this Veggie credit. And it's a nice incentive, and hopefully the companies will come to Vermont instead of going to other states or other countries.
Right, yes, okay. Yeah, well, good to know about that. Yes, thank you for plugging that. Well, also in your experience in working with lawmakers to try to help them find revenue for, and this is often how the process works. Having been a former legislator myself, if we try to think of if we think of a new program that we'd like to institute, lawmakers do actually sit down and try to figure out how to pay for it. They don't just say, "Oh, great, let's just do this willy-nilly." I want to make sure everybody understands that. So, what was your experience in working with lawmakers, and what kinds of revenues did you recommend to pay for programs?
It was actually very positive. So testifying was fun, interesting. If I lived in California, I probably wouldn't be testifying, but a small state like Vermont, my personal and usually when I would testify, I'd be representing the Vermont Society of CPAs. So I'd be representing all the Vermont CPAs. Of course, your season is the same as tax season. And tax season, we're working 12 hours a day, 6 to 7 days a week. So it's hard to get us to go to Montpelier for a day, but it was worthwhile. And I felt the legislators would listen because, like I said, we're always looking for more revenue. So, for example, they might say, hey, we don't tax services. Why don't we add a sales tax to services? Well, either does 48 of the other states tax services. And I felt I could educate them and say, a tax has to be enforceable, not easy, but not so complicated that you can't do it. And there's always pluses and minuses of any type of tax. And so I felt my role was to educate the legislatures, and I felt they listened. I felt they were, you included, hardworking and want to do the right thing. And I usually got the result that I hoped for. So it was a really positive, interesting experience to be able to go to the Capitol building and sit in a committee meeting with very important people and try to educate them on either what was positive or what was negative.
Well, that's good. That's reassuring, I think, to hear. And then you also have advised the tax department as well. And I think most people don't think that much about people who collect our taxes. But what was your experience with that?
Really important. So, in a way, the Vermont Department of Taxes almost like an adversarial relationship, because if we have an examination or an audit, we're on an adversarial relationship. However, again, being in a small state, you're going to run into that auditor at the Shaw's grocery store, or same thing with an IRS auditor. And I think Vermont Department of Taxes is wonderful. So I was one of the original members of the Vermont Tax Advisory Committee. And this was started by a tax commissioner to get Vermont tax practitioners and the tax commissioner and all the senior people of the Vermont Department of Taxes together in one room. We would meet once a quarter for a full day, and you would get tax practitioners from small firms, medium firms, large firms. And that was such a positive experience. First of all, I want to say every tax commissioner I've worked with in the last 30 years, whether he or she was appointed by a Republican or a Democratic governor, has been outstanding, including Craig, our current tax commissioner. Again, we all have the same goal, to collect the correct amount of tax from all Vermont taxpayers. So these quarterly meetings with the tax commissioner and the senior people of the department, the tax department might say, this is what we're thinking of doing. And we say, no, please don't do that. We would say it nicer, of course, but that's a stupid idea. Please don't do that. And they would listen. And if we could convince them that something they were thinking of doing was not in the greatest interest of practitioners and taxpayers, they would back down. And they would listen to us. If there's so much gray area in tax law, and if we would say we need guidance on this really important issue, they say, okay, thank you for bringing that to our attention. We'll study it and we'll make an opinion. So, and then of course the floods hit Montpelier, so they didn't have an office, their equipment was down. So we tax practitioners knew exactly the hardships that Vermont Department of Taxes had, and shortage of staff. Tax practitioners and almost any business, I guess, in Vermont have had, a significant shortage of staff. So we would work together. If it took an hour to answer our phone call, we wouldn't get angry because we would know that that's the best thing that could happen. And then again, being in a small state, we could be, if we were contemplating a large transaction, we could call Vermont Department of Taxes and say, this is on a no-name basis to protect our clients. We're thinking of doing this. How would you rule? And that way we would know ahead of time if it's something we would want to proceed on. So I love being in a small state where we could call our legislatures. I mean, where else could I be on a first-name basis with a governor than Vermont? Or the Tax Technical Committee, we'd be in the middle of a discussion and the governor or lieutenant governor would walk into our meeting to greet us and thank us for our service. So just being in a small state where we could communicate with each other, with the legislators, and give our views on the Vermont Department of Taxes. That's my favorite thing about practicing, being a tax practitioner in Vermont.
That's great. Yes. Well, again, I hope that's reassuring to people to hear good things about the tax department. And yeah, absolutely. I think a lot of us value the small state nature and being able to have access to important people. So I'd like to close with I'm asking all of my guests to discuss their ideas about affordability. That's what this is all about, and there's been a lot of rhetoric around the affordability or lack thereof in Vermont. So how would you define affordability?
I think that we all have access to basic necessities, which I would define, of course, as housing, which I know is a big issue, healthcare, employment, having good jobs is real important, having good education, which even though I'm not an expert, I think we have great education. The challenge is paying for it. Housing, of course, is not my area of expertise, but that's a challenge. But just having all the necessities and having a good winter coat in the winter.
Definitely have to be able to afford that. You're right. Great. Well, thank you so much, Rick. You've offered us a really important perspective on our tax system and our taxes. And so thank you for tuning in, folks. And I hope that you will continue to see other episodes of this series on affordability in Vermont.